Harlan Carrere has over 25 years of professional investing experience across multiple sectors and asset classes. Previously, he worked at Goldman Sachs, Fidelity Investments, UBS, and Schoenfeld, primarily in portfolio manager roles. Now, Harlan has been investing in digital assets since 2016, and the strategies employed by CCM are informed by years of managing large billion-dollar-plus portfolios in technology growth and market-neutral equity and derivatives strategies. Now, in addition, Harlan has extensive experience as an entrepreneur, including founding a digital record label and a Web3 NFT music platform. So, Harlan, sounds like such an interesting background, and you've got an MBA from Harvard Business School as well. So, welcome, and I'm looking forward to talking to you about digital assets. So, we are talking by chance the morning that Bitcoin just crossed 100,000. So what are your thoughts?
Yeah, it's amazing. It was a little bit difficult to sleep last night. I think around 9 o'clock Eastern time. I'm in Boston at the moment. We were hanging around at 98,000, and then it made a quick run right up to 103 and change. So pretty exciting. Made it a little bit difficult to sleep. But I think what we're seeing kind of in real time in over the last really over the last year, but in particular since the election, is we're basically seeing the undisputable birth of a new asset class, right? So previous to this, it was possible to treat digital assets, Bitcoin and so forth, as sort of questionable, as sort of a fringe asset. Would they go mainstream? Could you really own them? Of course, it had this tinge of being used by criminals and things like that. And now I just think that debate is definitively over, right? So we have a president that ran, on a clearly pro-crypto platform. The people that he's surrounded himself seem to indicate that he's going to deliver on that promise. And it feels a little bit like a game now of kind of front-running all the governments and big institutions that will need to buy this asset, and they're just trying to figure out exactly how to do it. And those of us that have been around for a while have the ability to go ahead and buy it right now. So I think that's what we're seeing. And to be frank, like for people like me that we've endured a fair amount of pain in the last few years, and frankly, like a lot of attacks, a lot of people have been debanked and things like this. I think there's some sense of indication that it's a real asset class, and we can talk more about how I think about the asset class. But I think it's a pretty happy time for people in crypto, and frankly, it's really only the second inning. It feels like to me like it's an important marker, but this is just it's very early days of the mainstreaming of digital assets, in my view.
Yeah, it feels like it's just now getting some legitimacy, even though, many people are kind of early, got the blockchain technology and what, Bitcoin would be able to do and what it represents in terms of, just energy, as Michael Saylor refers to it. But I feel like, with the Trump presidency and some of the people he's put in place, that they're really going to work hard to establish some regulations, which is, I think, what many people wanted.
Yeah, I think that's right. Just, in the financial industry, you need clarity. We're fiduciaries. We take care of other people's money. We want to comply, right? But it's hard to comply if you don't give us clear rules. And so I think, understanding the rules of the game, tax treatment, things like that, will just go a long way. And, usually, you do see a pattern that sometimes with new technologies, new innovations, government resists them. And if they can't stop it, well, they want to tax it. And if you're going to tax it, you've got to regulate it. And so, eventually, it's a bit of a trade-off. You trade some regulation and taxation for clarity and rules of the game. And then the asset can go, extremely mainstream. So I think at this point, resistance is almost non-existent. Like it's overwhelming. Previous to this, there was a tug of war. There were some big financial institutions, obviously, with Bitcoin ETFs, but you still had some, fairly powerful hostile politicians. They're just not that powerful anymore. So I think it's not totally smooth sailing, but I think, we've kind of been going maybe 2 steps forward, 1 step back for a while. I think it's going to be more like, 10 steps forward, 1 step back. So, that's a big upgrade from what we've been used to.
So it's been very interesting to be a part of this. So, and of course, there's other digital assets besides just cryptocurrency. You've got, NFTs, and maybe at some point, tokenization of physical assets. There's the stocks that are involved in digital assets, like a Robinhood or a Coinbase. I mean, do you have any thoughts about how a portfolio should allocate to all these various types of what some people say are the next revolution, digital revolution?
Sure. So, it's very client specific or person specific in terms of how you think about those assets. I'm happy to talk about it a little bit from my own standpoint, but maybe I can try to bucket each of those asset classes for you a little bit. And then, I think individual investors in conjunction with their financial advisor can try to think about what the right allocation across different like digital assets overall, and then within digital assets, what makes sense. So, it all starts with Bitcoin. I think, the best shorthand understanding of Bitcoin is that it's digital gold. That's, there are subtleties and you could talk about it for a really long time, but as a simple shorthand, for Bitcoin to equal the market cap of gold, that's $1 million Bitcoin price. And when you think about the improvements that Bitcoin offers over gold, the fact that it's divisible, that it's portable, that it's easy to store, very big improvements over gold. It doesn't seem like any sort of stretch to me that that it should equal the market cap of gold, in the foreseeable future. And the real world application of blockchain is money itself and the reserve asset. That's a big addressable market. So that's a great example to set. Then you have ETH, which is a smart contract enabled blockchain, so it can do more than just one thing. You can write smart contracts on it. And the way I think of that is sort of the birth of Web3. So it's like the internet, except with ownership rights. So instead of being kind of someone who's renting space or existing at the will of Mark Zuckerberg on a Facebook asset, you kind of own your own space. So it's the internet with ownership rights, which is very exciting. And, there are individual assets that are quite exciting. Solana, is sort of going after some of the same markets as ETH. They have a different solution, a monolithic blockchain. It's faster growing and their volumes have surpassed ETH recently by some measures. So there's a long line of various cryptocurrencies that serve different functions. I'd highlight just a couple others. For example, tokens that focus on decentralized infrastructure, for example. So one that's quite interesting that we've looked at recently is Grass, where you decentralize some of the computing function for an LLM. And you can essentially rent out part of your compute power for LLMs to be used when you're not using it, and you get rewarded with this token, and the token has yield. And then finally, of course, there's memes, which many people are skeptical of, but I look at them personally as just media assets, right? Is Mickey Mouse a worthless asset? It's just a pretend mouse. It's obviously not worthless. And I think many meme coins form a community of people that it gives them meaning, it gives them something to associate with. And so I think some meme coins like Doge or Pepe are really quite interesting, right? There's a philosophy and there's a real community and people are having fun and they're making money with these. So those are cryptocurrencies before we even get into the others. And I would say that personally we own we own Bitcoin, Solana, Grass, Doge. So some of the examples that I mentioned, these are where we think there are strong network effects, strong communities, good technology. And it really makes sense. And we try to value these as much as we can, the same way I would evaluate a technology stock when working for a big investment company. Outside of cryptocurrencies themselves, as you mentioned, there's NFTs. NFTs only recently, in the last really 3 or 4 days, have started to come back to life after a long NFT winter. It's funny, it got to the point on NFTs where people were sort of embarrassed to even mention them, which is usually a good sign of a bottom. I think NFTs are fantastic. It's a way of having digital scarcity in art. So many people can have copies of the same piece of art, but there's only one true owner, which really isn't that different from mainstream physical art. There's the Mona Lisa in the Louvre, but anybody can buy a reproduction, but the reproduction is not worth the same as the original. But all those reproductions make the original worth more. NFTs are coming back to life. I can just say that, I personally own a CryptoPunk. I own some Jack Butcher NFTs, like really quite a lot. They bring me a lot of pleasure, and I own some physical reproductions of these NFTs as well. You also mentioned the tokenization of real world assets, which I think is interesting. I'm not sure whether this is the cycle where that will really go mainstream, because there's a lot of kind of integration with the real world. So if you think about it, if I tokenized the deed to my house and held it in my wallet, would that mean that if somebody hacked my wallet and grabbed the NFT that's the deed to my house, that they could come knock on my door? Like it's a little bit difficult to turn some of these things into a bearer asset, like to turn a car, the deed to a car, the title to a car or a house, into a bearer asset. So I think there's quite a few things that need to be worked out on that front. I think it's a very big addressable market. I'm not sure that I've seen too many solutions that are ready for prime time yet. And then, and then finally, just on stocks, well, we could talk a long time about that, but there are of course the Bitcoin ETFs, which are just a way of owning Bitcoin in a wrapper. The products by Fidelity and BlackRock, in my opinion, are great products. I think I own them. I think it's an easy way to own Bitcoin in a taxable account at a low cost. MicroStrategy, I think, is very interesting. There's been, I think, a lot written in, but a lot misunderstood about what's happening there. I would describe it as Michael Saylor's kind of monetizing volatility. He's taking what is normally something that people don't like in stocks, the volatility, and taking a call option, stapling that to a bond, and turning it into a convertible, and as a result can raise money at 0% interest by embedding a very valuable call option with it, and go and buy Bitcoin essentially at a discount. So it's really kind of Bitcoin on steroids, and I think it's quite interesting. And he has the advantage of being able to move quickly. On some other stocks, we can get into more details, but I feel like I've given you a pretty long answer so far. But let me know if there's any of those you'd like to talk about anymore.
So much interesting. And I was just having a conversation last night about the decentralized infrastructure. So it's interesting that you would bring that up. And this friend of mine is an investor in blockchain companies, and she mentioned Helium. I don't know if you've heard of that company, but where people can actually use XSA data or something like that, almost like a peer-to-peer, but with data. So that's like a whole new kind of interesting new frontier.
Yeah, I think that's right. I mean, with a lot of DePIN, the way I kind of think about it, I think it's an easy way to conceptualize it is it's like Airbnb for physical infrastructure, right? So the kind of the innovation of Airbnb is like, if you have a summer house you're barely using, or you have a spare room in your house and you'd like to monetize it, you drive through a neighborhood, a lot of the buildings are empty. If you could put your spare room or your spare house on Airbnb and monetize it, why not? Well, similarly with a lot of physical infrastructure, if you've got some expensive NVIDIA chips and you're not using them, solutions like Render or NDR or Akash, AKT will essentially let you, rent out your GPU when you're not using it and earn tokens. So, your GPU is going to be obsolete before long. You may as well milk it for all that you can. And then many people, of course, can't afford their own GPU, but they're happy to, rent it in the increments that they need. And, you're seeing another, I'm less familiar with Helium, but, you're seeing solutions, as I mentioned, like Grass, or Render or Akash that are doing a lot of interesting things. You're seeing it some cases with storage as well. Filecoin, another one that's interesting is Nosana. So I think it's a very interesting category because anytime you're able to monetize an asset that's otherwise not being used, it's kind of like free money, right? And so if you've got extra rooms in your house and you can rent them out on Airbnb, or you have a summer house you only use a couple weeks a year, that extra income is really valuable, and it's very efficient for the economy, right? Because people that otherwise maybe couldn't take a vacation can now have access to a nice place. But I would argue that it's even more powerful in tech because the infrastructure is more likely to become quickly obsolete. So your house on Cape Cod is not really losing value, but your physical tech infrastructure is. And so I think there's an added incentive to monetize it as quickly as you can before it's fully depreciated. So I think those are very interesting solutions, and those tokens are essentially the currency of a closed system, which allows people to share infrastructure. So they're a little bit like a national currency for this closed system of shared infrastructure. And it democratizes access to, the highest tech infrastructure. So, you can't afford the best NVIDIA chip, but you can afford it on demand. That can be life-changing for people that are, need access to those chips, to do their work. They can get it on demand. So, and again, this kind of goes to the idea of Web3, or like the internet, but with ownership rights. Yeah. So, there's a way to own and monetize your assets that you just can't really do the same way in Web2.
Well, let's talk about Web3 and the metaverse.
Sure.
A little bit. Of course, Facebook changed their name to Meta. Maybe they were a little early. But do you see that kind of fruition? And if so, what would that look like, do you think?
Yeah, it's you kind of have to use your imagination, and then, at least in my case, kind of be humble and say, I don't know exactly what it's going to look like, but my suspicion is that it's already happening. Like this is a little bit of a boiling of the frog. Like it's happening to us right now, and we're sitting here in the fish tank going like, where's the fish tank? But we're actually in it. And so what I mean by that is, I own more Bitcoin than I own bonds. I own more crypto than I own stocks. I own more digital art than I own art. My PFP is an NFT. It's not a picture of me. I get my news through, like, essentially exclusively through X, because everything that you need is on. There's, you can say that there's some things on X that are not good, but everything that is good and useful is on X. There are many people that I only know by their NFTs, and they only know me by their NFTs. We don't know who the other person is. And in many cases, like I know, like, I have a relatively developed relationship with them, but it's all virtual. I regularly meet people that I've known for years, but I'm meeting them in person for the first time, and the relationship is online. It largely revolves around crypto. So, you could argue it's already happening, and I think, for example, we'll see things in NFTs where, like, I'm pretty interested in art. I've got this like giant painting behind me here. It's not very portable, right? And I look forward to getting applications where I can have all of my NFTs at my home, and when I travel, in a hotel or a second home, I have a blank wall and I can project my own art, right? I can put my own art on the TV. That's already happening. So I think we're kind of there, right? And Bitcoin is the gold of the metaverse. Solana is something like the Amazon Web Services of the metaverse. NFTs are the art of the metaverse. PFPs are your identity in the metaverse. Telegram is the communication channel. Twitter is the media. So it's kind of happening. And I think as we see, some of the VR and AR things get more developed, and it feels like we're getting closer, that, you will live there, and that, maybe future meetings that we'll do, like maybe we'll have the goggles on or something like that, and it'll feel like we're in the same room. Yeah. So I don't think it's like one day, oh, there's the metaverse. I think it's kind of creeping up on us gradually, and then you'll wake up one day and you're like, oh yeah, this is all quite virtual.
You're right, because it's almost imperceptible, but it is happening.
Yes.
So finally, Harlan, let's talk about, I have a lot of people ask me, especially lately, with Bitcoin doing so well, how they even get started. And I think, like 99% of people don't have any cryptocurrency. So if somebody's interested, first of all, is this a good time? And how do they get started? And what percentage of a portfolio would you say is good to have?
Sure. So what I would say is first, like, just a little bit of a general investment insight. So, and I learned this from a portfolio manager at Fidelity very early in my career. He said, when you don't understand something, the natural human instinct is to dismiss it as kind of stupid. You're like, this is dumb. Mm-hmm. But what you're really saying is, what you should be saying is, I don't get it. If anybody's dumb, it's me. I missed all of the antecedent events leading up to this thing that I don't understand. So maybe I should look into this and figure out what's going on. And, I will confess that, I think I read the Bitcoin white paper in 2010. And I kind of thought, well, that's interesting. I don't understand how you can, I still don't get how you can have digital scarcity. And I put it down for 6 years. In that time, it went to $600. I could have bought it for a couple of dollars and I ended up buying it, 600 times higher. I paid a price for that. But, I kind of remembered that advice back in 2016. And I thought, well, maybe there's something to this, because I do notice the people that are into Bitcoin are pretty intelligent people, right? They're in 2016, these are high IQ people that took the time to read the white paper a few times. And I'm like, I'm going to understand this. And, so what I would say to people is, have a little bit of humility. Just because it doesn't make sense to you doesn't mean it doesn't make sense, because there are a lot of bright people for whom this makes a lot of sense and they put a lot of money into it. So I would say take the time to understand it, because it's an extremely volatile asset. It's probably going to get a little less volatile over time as it goes mainstream. But what I would say is, anytime you invest money in something, it's pretty important to have at least a good understanding of what it is that you own, because if you don't, you'll fold pretty quickly when it starts to go down. You'll say, I was wrong. But if Bitcoin goes down a lot on you, it doesn't mean you were wrong. It's a volatile asset. It's supposed to go up and down, right? So, but if it goes down 80% and then quadruples, and goes down 80% and then quadruples, that's a pretty good return. It's a great return. It's maybe the best returning asset of all time. It's just that it's very volatile. So my point is, before you even think about doing it, you've got to have the humility to admit that you don't understand it, take the time to understand it at least reasonably, and then only invest an amount where you feel you can stomach a great deal of volatility. Now, if you get past that, I would say the simplest thing to do is to just buy some Bitcoin. Like, just keep your life really simple. If you don't want to set up a Coinbase account, the ETFs that Fidelity and BlackRock, again, I think are excellent products. It's a relatively low cost way to own Bitcoin, and you can own them in your stock account. It's simple. You can own them in your retirement accounts if you're American. So I think that's a very good way to get started. And I would say, invest 1% to 5%. So even if it falls 80% on you, you're not going to panic and sell. So you have to make sure you're not going to panic and sell. For more advanced investors, and again, I would have to say you do need to be reasonably advanced, because the financial statements of a cryptocurrency don't look anything like the financial statements of a stock. And you have to learn a whole new set of analytics. I had to kind of reteach myself finance to understand crypto later in my career. You can start to branch out into different cryptocurrencies. And as I said, the ones that we like in particular are ones like Solana, Grass, Render, Akash, or some additional ones that people should do their own individual work on and see if they make sense for them. And then in the stock market, I think Bitcoin, I think MicroStrategy, if you can stomach the volatility, is a quite interesting levered play. As far as what to allocate, I would say, if you don't know, start very small, because you should expect a lot of volatility. I can tell you that the vast majority of my assets are in digital assets, but I have a very high volatility tolerance. And I have assets outside of crypto such that, I can weather the storm in crypto, which, inevitably comes.
Well, Harlan, thank you so much. Fascinating. I could talk for hours to you, so maybe we'll have to do it. We'll have to do a follow-up at some point.
Yeah, I think it'd be fun. It's maybe have a more detailed conversation on an individual idea at some point in the future. That would be really fun. But yeah, I enjoyed speaking with you, and happy Bitcoin 100K to everybody out there.
Yeah, let's maybe Bitcoin 250K. We'll talk next.
I think we'll see it. Well, hopefully before then. So anyway, all the best, Jane. Thanks so much.
Thank you so much.
Yeah, we'll see you. Bye.